And welcome 11 commerce students. Today in this business studies class, I will explain to you back to back two things from preference shares. First is the merits of preference shares. First I will talk about the merits of preference shares and then I will discuss the demerits of preference shares. So first coming to the merits of preference share, as you can see I have written in the board the merits of the preference share. The issue of preference shares has following benefits. What are the benefits? First is collection of large amount of funds. Collection of large amount of funds. The preference shares help to collect a huge amount of fund because cautious investors and financial institutions prefer to invest in preference shares of a company. These shares attract more public due to their fixed rate of return. Their rate of return is uh, fixed, unlike the equity shares, whose return depends upon the dividend earned by the company and depend upon the profit earned by the company. It is fixed. Preference shares return is fixed. So because of fixed nature of return, it attracts more and more investors. Second is no obligation for dividend. No obligations for dividends. It means a company is not bound to pay dividend on preference shares if its profit in a particular year are insufficient. It can postpone the dividend in case of cumulative preference share also. So it is not compulsion in case of certain preference shares that they have to pay the dividend yearly. If insufficient profit is there, they can also carry it to the next year, upcoming year. Next is no interference. No interference. The preference shares shareholders do not carry any voting rights. The presence of preference shares does not diffuse the control of equity shareholders. With preference shares in capital structure also, the equity shareholders retain exclusive control over any company. So they have no interference. Next is no charge on assets. Now, preference shares are not issued any kind of security. The company can keep its fixed asset free for raising loans in the future. So, no assets are kept as a security in case of raising capital issuing the preference shares. Next is trading on equity. Trading on equity. It means the rate of dividend on preference shares is fixed. Hence, in years of prosperity and more profit, equity shareholders enjoy high rate of earnings with the presence of preference shares in the capital structure. The rate of dividend is, since the rate of dividend in case of preference share is fixed, equity shareholders can earn high rate of dividend during the time of prosperity, because there is no obligation to pay high rate of profit to the preference shareholders. So the equity shareholders can enjoy more and more dividend during the time of prosperity. That is the boom period. Next is flexibility. Flexibility means a company can issue redeemable preference shares for a fixed period. The capital can be repaid when it is no longer required in business. There is no danger of overcapitalization and the capital structure remains elastic. Next is variety. Variety means what? Now, different types of preference shares can be issued depending on the need of the investors, such as participating preference shares or convertible preference shares, or redeemable, irredeemable, cumulative, non-cumulative preference shares may be issued to attract bold and enterprising investors. So there are different kind of, I have told you in during while I was teaching the classification of preference shares, that there are a lot of preference shares. There are different types of preference share on the basis of different things. So investors can invest in any type of their choice. So wide variety is available in case of investing in the preference shares. So talking about the advantages, these are the different types of advantages I have written in the board. These advantages you will mention one by one when you will be asked about the merits of investing in the preference share. Merits, remember. Now I will talk about the demerits of investing in preference share. Demerits. Now, talking about the demerits, it also has certain limitations. This kind of source of finance also has certain kind of limitations, and I will talk about the demerits one by one. First is limited appeal. First one, limited appeal. What does that mean? Bold investors do not like preference shares. Cautious and conservative investors prefer debentures and government securities. In order to attract sufficient investors, a company may have to offer higher rate of dividend on preference shares. Next is low return. Now, why a low return? Low return means what? Fixed return. When the earnings of the company are high, fixed dividend rate on preference shares becomes unattractive. Preference shareholders generally do not have the right to participate in the prosperity of the company. At the time of earning of higher profit, equity shareholders get higher dividend because their dividend is dependent on the profit. If the profit is earned high, then they will get a high rate of dividend, because dividend is dependent on the profit. But during the prosperity, they doesn't enjoy such facilities. The preference shareholders always earns a fixed rate of dividend, which is unattractive. So it is good for the conservative one, but not for bold investors. Next is no tax saving. No tax saving. That means dividend paid on preference share is not deductible from profits for computing in taxable income. The dividend paid to preference shareholders by the company is not treated as an expense, so it is not deducted from the income from the company before calculating the income tax. So the company is not able to get tax benefit by issuing preference share. It is not good for getting the tax benefit. That is what is meant by this, and so this is great disadvantage for any preference shareholder. Next is no voting right. I have told this earlier also. Like the debenture holders, they don't have any voting right, which is unlike the equity shareholders who are the real owners of the business. Preference shareholders generally do not carry any voting rights. As a result, preference shareholders are helpless and have no say in the management and control of the company. Next is fixed obligation. Fixed obligation. Fixed obligation means the rate of dividend paid to the preference shareholder is fixed. During the time of low profit also, a company has to pay fixed rate of dividend to its preference shareholders. So it is treated as a fixed obligation, which is quite rigid in its own way. Next is fear of redemption. which I consider as the last disadvantage, last drawback of this preference shareholders. So fear of redemption. Fear of redemption means what? The holders of redeemable preference shares might have contributed finance when the company has badly in need of funds, but the company may refund their money whenever the money market is favorable, despite the fact they stood by the company in its honor of need. So these are the different demerits, which are the different drawbacks from which the preference shareholder suffers. Apart from these, many advantages are there, but certain disadvantages are also there, like equity shareholders and debenture holders also have. So please mention this point whenever you were given the question, what are the demerits of preference shareholders, and also merits, which I have taught you earlier in this video. So that's all for today. In my next class, I will start up another new topic from this chapter, business finance, that is retained earnings. Retained earnings, that is the own fund of the company. So till then, goodbye.